All right, good morning everyone. Welcome to this presentation. This is the Sales and Use Tax Compliance for Dummies. It's a presentation presented by Webbbility with our special guest from Avalara. I'm Rob McGordy, I'm the Director of Product here at Webbbility, and I'm joined by Andrew Kim, the Strategic Alliance Manager at Avalara.
Hi everybody.
As well as Chris Rossini, the Regional Sales Manager at Avalara. All right, so as everyone can see, hopefully the slides are presenting. We're going to dive into everything you need to know about sales and use tax. And without further ado, we'll get started. So quick little housekeeping. We're going to dive into a quick overview of Webbbility, give you a big picture of why sales tax is important, and then dive into some of the nitty-gritty about Nexus, product taxability, audit planning, preparation, and then how to take a load off and automate all of this work. So starting out, what is Webbbility? Hopefully you already know since we invited you guys to the webinar, but effectively what Webbbility does is unlock powerful business insights and provide a single command center by seamlessly integrating 75 best-in-class apps so e-commerce SMBs can grow and better compete. Really what that means is small businesses can run their business using whatever apps they like, including tools like Avalara, and we bring everything together to help them make sense of all that data. A quick overview of what we do. We're the leading provider of e-commerce management software since 2007. We've powered over 10,000 stores online. We have over 40 strategic partners, including Avalara. We're QuickBooks, Xero, and NetSuite certified. We have 75 platforms integrated. We have a 100-person plus global team. We have engineering expertise in e-commerce, payments, fulfillment, and accounting. We also have a 98% customer satisfaction rating because we really care about the customer. A quick overview about our products. The first and foremost is Unify. This is our simple product for SMBs that are targeting the $1 to $5 million revenue range, and it's a cloud-based application to help SMBs run their e-commerce business from anywhere. The next step up is our Unify Enterprise product. It's for small to medium-sized enterprises with $5 to $20 million in revenue, and it's a client software to increase productivity and profits within a large team. Now, Webbbility as a whole is the center of the e-commerce market for an SMB. We touch order management, inventory, shipping, accounting, analytics. We provide collaboration, workflow automation. We help with email marketing, multi-channel selling, and of course, the topic of this presentation is tax compliance. So without further ado, I'll start out with a poll question. How are you currently managing your sales and use tax process? If everybody can enter their answers, we will continue on to the presentation and review the results later. So now I'll hand it over to Andrew to dive into some of the specifics of Avalara.
Perfect. Rob, thank you so much. And thanks everybody for your time. I know it's always hard taking time out of the day to learn a little bit more about different subjects. So we're happy that everybody's on the line. A little background about myself. Again, my name's Andrew. I'm the Alliance Manager with Avalara. I've been with Avalara for about 3 years, working with a lot of our partners like Webbbility and a lot of the customers as well. So to give you a quick background before we get started with the presentation, at Avalara, our goal, really what we do is we provide the fastest, easiest, most accurate, affordable way to manage sales tax. And our goal, right, it's pretty simple. We make sales tax less taxing. So we're going to talk about a lot of key concepts related to sales and use tax, and then also give some great feedback and tips. One last housekeeping item as well. If you have any questions, we're going to have a portion of time dedicated at the end towards Q&A. So feel free to write any questions within the GoToWebinar box, and we'll do our best to either answer those questions at the very end or during the presentation. So a lot of us have seen this, right? This is the tip of the iceberg, and I think this gives a great representation of sales tax and a lot of the things that we're going to talk about today. So really what we see from a customer's perspective, as an end user's perspective, is just sales tax rates, right? So I'll give you an example. Last night I went to Home Depot. I bought myself a Christmas tree. I was probably one of the late shoppers that actually got a Christmas tree. But I went and I got one. I was charged my 8% sales tax rate that we charge in Southern California in Orange County. And that's really what we see as an end user. But that's actually broken down between not just one tax rate, but it's broken down between the state tax rate, county tax rate, and sometimes city or special jurisdictional tax rates, right? And if you actually look at it from a business perspective, there's a lot more that goes beyond that, right? There's a few key concepts that we're going to talk about during this presentation. I'll go through them, right? Just a high level. With Nexus, you have Nexus, which means loosely defined as a physical presence where companies out there have to register to collect and remit sales tax. Product taxability is another thing that you have to think about and consider as a business, because you have different products and different services that are taxed differently across different states, and also based on usage, and also based on sometimes revenue thresholds, right? So there's a lot of different things to consider there. Another thing that we'll talk about is sourcing, right? With sourcing, there's a few different ways that in-state transactions are taxed. And I'll give you an example, right? For the most part, if you have an in-state transaction, there's destination-based sourcing, which means wherever the ship-to address is the sales tax rate that you're going to be charging. There's some states like Arizona where it's origin-based, where wherever the ship from is the sales tax rate that you go by. And in California, of course, we always do things a little bit more difficult, and there's a hybrid model, right? So those are a few different examples of how tax rates and what rules you'll actually use as the business change, right? With exemption certificates, you'll see a consistent theme here. With exemption certificates, as a business, you'll have to collect them if you're not selling to an end user. So if you're selling to a distributor or a reseller, you'll have to get a piece of paper proving why you don't have to collect sales tax. Now, the fun thing about it is with exemption certificates and the guidelines, they differ state by state. You have some states that have exemption certificates that don't expire. Other states like Florida that expire at the beginning of every year, right? And then with sales tax returns, there's state, regional, and city returns, which again differ by state. And really, I think the net of it is with sales tax, there's a lot of things that are in flux, a lot of things that differ based on state by state guidelines, and also product by product guidelines. So with sales tax, we like to use this example, right? It's like hitting that moving target. You think you're there, you think you understand it, but then things are always changing, things are always shifting. So that's a lot of what we'll talk about, some of the things that we'll cover during this presentation. Now, with sales tax, there's a few different reasons that sales tax really matters, right? From a macro perspective, we'll talk about how it impacts states, some of the challenges of sales tax compliance if you're a business that's actually managing that process manually. And then we'll go to some of the hidden costs of managing sales tax if you're using a manual process here. So right here, we actually have a breakdown of state revenue by different categories. So if you look at this, I was actually pretty shocked when I looked at this, right? I thought that corporate net income taxes and individual income taxes would actually be more like a bigger piece of the pie for state revenues, but it's actually sales tax, right? If you look at this, with sales tax, it equates to about 50% of the total state's revenue. And that's pretty alarming, right? That's a big source of state's revenue. And when I actually started at Avalara earlier in 2012, the narrative completely shifted, right? Back then, it wasn't a good economy. A lot of states were running at a deficit. I'm located in California, and I think it was pretty highly documented, the budget deficit that we had in California. So California actually went through pretty dramatic measures where, as a state, California hired 100 sales and use tax auditors to audit different businesses as a source of revenue. A lot of different states followed suit because they realized, well, hey, if this is a big source of state revenue and we're not collecting everything on the front end, we need to make sure that we're doing everything we can to capture that revenue for the state. And now, even though things have changed, it's a lot better economy now, but a lot of those best practices that states actually went through the last several years are still in place. So with sales tax being such a big part of revenue from a state's perspective, it's obviously important. And it's a piece that really trickles down to the businesses in the United States. So going into sales tax compliance and some of the challenges, with sales tax, it's a statutory requirement, right? As a business, it's not like you get an option to collect or not collect sales tax. It's something that you're actually mandated to do. And a lot of businesses out there are managing sales tax manually. And I'm actually going to pause here. Rob, do you have the answers from or the results from the poll question?
Yes, I do. So we had 37% who answered that tax tables, 51% said tax automation, and then 12% said tax compliance not high on my list.
Okay, perfect. And that's great to hear that there's a good percentage of the folks on the call that are actually using some type of a solution to automate sales tax compliance. It's fantastic. About 40% of the folks on the call using tax tables. That's actually about what I expected. That's typical of a lot of the companies out there that we've surveyed. Now, if we're looking at manual sales tax management, there's a lot of components of it. Some may be uploading tax tables and doing the research on tax rates. It might be manually doing the research on tax and jurisdictions, product taxability rules, collecting the exemption certificates when you're selling through resellers or distribution models, and doing that manually. Also with the sales tax filings, right? If you're manually doing those in-house, those are different ways that you could manage sales tax in-house or very manually, right? There's a lot of things that we're going to talk about sales tax from a manual policy that involves a lot of steps, and a lot of companies are saying, well, hey, you know what, if sales tax management, if sales tax isn't a value add to the company, if it doesn't increase our bottom line, if it doesn't increase our revenue, if it's not a value add to our customers, does it really make sense for us to focus so much time, effort, and energy into it, right? So those are a lot of the topics that come up when we talk about sales tax compliance. And this kind of adds some color to it. Right here we have all these different taxing jurisdictions represented by these different color codes. Now you could see here that there's a whole heck of a lot of taxing jurisdictions in the United States. Now in the U.S. there's over 10,000 separate taxing jurisdictions. There's thousands of changes to the sales tax rates, rules, and boundaries on an annual basis. So things are always in flux. And I think that's a common theme that we've talked about with sales tax as a whole, right? It's not just in flux from a state-by-state level or product-by-product level, but there's always changes as the days go by, right? There's thousands of changes just per year with sales tax rates, rules, and boundaries here. Now, one thing that we've had a lot of conversations with, especially related to tax tables, are tax rates not being tied to zip codes. So to give you a background, with zip codes, they were made by the U.S. Postal Service in the 1960s to deliver mail. Taxing jurisdictions were built completely independently. Those are built by states that are actually looking to collect a revenue, right? So those taxing jurisdictions don't equal zip codes. Now, if we have 37% of the folks on the call using tax tables, it's probably a zip code that you're using and applying a sales tax rate, or maybe a zip +4. That's one key thing to note, right? Zip codes don't equal taxing jurisdictions. In addition to that, a lot of states out there have multiple levels of sales taxes that could be applied, right? There could be not just the state and county level, but city and different levels of special jurisdictional taxes that may apply. So there's that, and multiple tax rates can actually be applied within a specific zip code. And I'm going to show you an example of that right here. So right here we have a slide that shows zip code within the Denver metropolitan area in Colorado. And you can see right here you have this taxing jurisdiction being completely independent from the taxing jurisdiction on the left. And what I think is amazing is right here you can see on the same street the taxing jurisdiction shifts completely. And in some very extreme circumstances, within the same building, you can have different taxing jurisdictions, right? So in this example, you have one zip code that has 4 different sales tax rates. And the net of this is, if you're looking to manage sales tax rates by zip codes, well, it's something to be cognizant of, because sales tax rates don't equal zip codes. So you could have a case where you might be charging a customer too much. In an extreme case, you might have a customer not want to do business with you. On the other end, say if you're charging less sales tax than you should, you have a customer that's probably really, really happy. But if you went through an audit process, there's that exposure that's opened up. So really, with geolocation technology, to be able to determine the exact point of the taxable transaction, that's important. That's important for not only customer satisfaction, but eliminating any ounce of exposure out there.
Hey, Andrew. Really quick, we have a great question from Robin. She asks, would we have to charge taxes if we don't have a physical location, meaning they purely have an e-commerce website? She says that they're a wholesaler, business to business, and that they're headquartered in a state that does not have sales tax, and the state does not provide a resale certificate.
That is a great question, Robin. I'm actually going to cover that in a few slides, so that's going to be a great transition a little bit, and I'll talk to that. I'll talk to that point. Any other questions out there, Rob, while we're pausing here?
I think that was probably the only one worth mentioning, and if you're going to cover it, sounds good.
Yeah, perfect. That was a great question, by the way. I'll make sure to address that. So right here we have a study done by the Wakefield Research Group, and they did a survey of 400 different businesses out there, ranging from smaller companies to larger enterprises, and they surveyed different accounting and finance professionals based on everything sales and use tax compliance related. And the businesses that they surveyed were businesses that were using more of a manual process to manage sales tax, and they found some interesting findings here. So if we're looking at this diagram on the left, they found that about half the businesses couldn't remember the last time that they updated the sales tax process. And I think a lot of people probably on the call have that same scenario where you might have updated tax tables one time when you started your e-commerce site, or when you maybe when you implemented your ERP, but then haven't really made any changes since, right? And that piggybacks off the next image right here. So you have about half the people out there that were surveyed out of the 400 businesses say, well, you know what, if we had an audit today, we wouldn't be confident of our policy, and the auditor would probably find errors and mistakes with our sales tax policy. Now, for businesses that actually go through an audit process, it can be really, really expensive, right? The average cost of an audit was over $100,000 just to manage the process. One thing to note is this doesn't include any fees or penalties. This is just going through the process with taking time from, say, different key executives, different folks in finance and accounting, maybe getting third-party consultants involved to help out with the process. So it's really an expensive process when you're having to go back, reference certain things that were related to sales tax when you don't have a documented policy in place. And this actually breaks down on it actually goes a little bit further on this next slide. This shows the average time that it takes to do different aspects of sales tax compliance for those companies that were managing the whole process manually. So you have different aspects of managing sales tax, varying from the tax filings to managing the exemption certificates to administering the taxability changes. And that's a lot of time, right? It was over 300 hours of the companies that were surveyed, over 2 months of full-time work for one employee. And really, when you look at this, there's an inverse relationship between the time spent managing sales tax and exposure if you're managing sales tax manually. Now, it's business. You could be way less than this 300-hour threshold, but you might be opening yourself up to more exposure. That's a lot of times the case. Or you could have a policy that's completely accurate. You could be keeping up to date with all the sales tax changes, but you might be spending a lot more time on an activity that really doesn't add value to your company, right? It's not something that adds to your bottom line, to employee development, to customer service, et cetera, right? So that's a big cost of doing business if you're managing that manually. Now, shifting gears, we're going to talk about Nexus, really what it is, why you should care, some Nexus triggers out there. And Robin, here's where we're going to address the question that you had. So to give you an idea of what Nexus is, it's a connection between a state and a business. And if you have Nexus within that state, you have to register to collect sales use tax and remit that if you're in a state that actually does have sales tax. Now, if we were to take the loose definition of it, it would be having a physical presence within that state. But I say it's loosely defined because with a lot of different laws with e-commerce, things have shifted, and there are also a lot of changes with what is determined as Nexus because states make those guidelines. So to give you an idea, right, with the physical presence, there's some states that say, well, hey, if you have a physical location, that's a Nexus trigger. You have to register within that state. There's other states, I'm actually going to click ahead, and there's some other examples right here. There's other Nexus creating activities where if you have remote people, whether it's, say, salespeople, whether it's consultants, that could be a Nexus trigger. At Avalara, we do a lot of trade shows. There's some states where if you are in that state doing a trade show over X number of days, you have Nexus within that state, at least during that period that you have the trade show. Other times, and this is probably more relevant to the e-commerce side of things, if you sell through different affiliates, if you have commission to resellers, that could be a Nexus trigger right there. And I'll give you a perfect example. There was a customer that I actually worked with that prior to using Avalara was based in Florida. They had a few affiliates that they worked with. One of them that was actually based in New York, and that affiliate resold the products, they commissioned them, and they didn't realize that they actually had to register within the state of New York. Now, they didn't realize that until they actually got audited by the state of New York and said, well, hey, you do have Nexus, and here's why. And that was kind of the wake-up call there, right? So it really depends because the state guidelines of what determines Nexus can change, right? So here's just a few examples right here. One big thing that we've come across a lot is customers coming to us who are using Fulfillment by Amazon. So for those of you who don't know what Fulfillment by Amazon is, and what we'll call it the FBA, it's utilizing Amazon's fulfillment network, and they have a fantastic network and make it really easy for the customers where a lot of companies out there are saying, well, hey, we're going to sell the products, we're going to create and sell the products, we're going to rely on Amazon, and they're going to pick, pack, ship, and provide customer service and the fulfillment and the logistics behind all of that, right? And there's a lot of good things about FBA. There was a study that actually showed that about 70% of the FBA sellers reported an increase of over 20%, and that was a big range, right? It was 20% or exponentially more than that after becoming participants, right? So there's a lot of reasons businesses out there are using Fulfillment by Amazon, but there's also a lot of considerations. With Amazon, they have fulfillment centers in 16 different states across the United States. If you're using FBA, that is a Nexus trigger because you're using different warehouses that are housing your inventory. So that's something to be very, very cognizant of because we've had a lot of customers say, hey, we're in a couple states and talk to us about automating sales tax within those couple states. And from there, once we find out that they're using Fulfillment by Amazon, that expands dramatically. And I think a lot of people that are actually automating sales tax, and I know that the poll question had about 50% of the participants automating sales tax compliance. If you're not automating it, you'll note that the more states that you're registered in, the exponentially more complex it becomes to manage the whole sales tax policy there. So we're going to shift gears and talk about product taxability. A few reasons that it's so confusing, some of the product taxability issues. Now, what comes up oftentimes is having different products that are taxed differently across different states, that may be taxed differently based on usage or maybe taxed differently based on dollar threshold. So I'll give you a few different examples of this. with Avalara, we're a cloud technology, we're a software. In California, where I'm located, software as a service is not taxable. But in different states, like say New York, for example, it's taxable. In other states like Texas, it's taxable at 1% of the state sales taxes, right? So that's one example. Another is I'll give you an example with food. I myself, I'm a huge coffee drinker. I go to Panera Bread right across the street from where I live, and if I actually get a cup of coffee to go from there, I cannot charge sales tax. But funny enough, if I actually sit down, if I use one of their cups of coffee, if I say I'm eating breakfast there inside the store, and I'm using one of their cups, I'm charged sales tax on that. So that's kind of a funny way that you have taxability that changes based on usage, right? With revenue, with clothing, we have different revenue thresholds as well. I'll give you an example right here. Within the state of New York, you can have these pair of boots for $120. You can have a pair of boots that are $90, yet you have one pair that's taxable because it's over the $100 threshold. You can have this pair that's exempt. And there's endless examples like this, right, where with sales tax, it doesn't really make sense. There's not really any logical reason that it's over a certain dollar threshold that's taxable versus exempt. But if you're managing that process and you don't have an automated system in place, it's really, really hard to track all of that, right? It's really hard to keep track of different sales that are over or under a certain dollar threshold. And it's not just for the state of New York, right? There's different states like Tennessee, for example, that have certain sales over a certain amount being taxable versus under a certain amount. So now with audit planning, preparation, and avoidance, right? There's different things that we would suggest that companies out there do. And a lot of these best practices are actually from our head of tax services, who used to be a California state sales and use tax auditor for a long, long time before he actually joined Avalara. And he noted that when he actually went through different companies to go through the audit process, he would always look for errors in process, right? And if you look at these mistakes, failing to file a return, filing returns with errors, failing to report sales, a lot of these were just simple errors that weren't intentional, but just were errors in process because there wasn't a systematic way that the companies were managing that, right? One thing to note is when you mentioned that when companies actually had a negative audit, they would be very, very likely to be visited often by the auditors in the future, right? That's kind of that red flag right there. And there's other examples, right, with not collecting exemption certificates or not properly reporting use tax, right? Those are key things to look for and key things to really have a process around. Now, here's some suggestions that we have to automate to reduce audit risk. One thing we would always suggest is to do a Nexus study, right? A lot of the Nexus guidelines state by state are changing. So as your business is expanding, we have a lot of people that are doing e-commerce, that are doing revenue with different states. It's a good idea to actually do a Nexus survey to see if you might potentially have that exposure that maybe you should have registered within a certain state. Whether there's a CPA that you work with currently, or if you wanted to use, we actually have the tax services department that focuses on Nexus analysis and among other things. That is a good idea. If you're managing sales tax manually, you do want to stay up to date with rate, rule, and boundary changes. That's something that's constantly in flux and something to monitor on. We have some companies that do it on a monthly basis, some that do it more frequently than that, but it's something that we always do suggest if you're using sales tax, if you're managing it manually. Another thing, I think this is the big one, be compliant from day one, right, especially with new businesses. Now, we ourselves, we're a technology company, and we've worked with a lot of different technology and high-growth companies or other e-commerce companies that say, hey, you know what, we're just starting out, we're not going to worry about this, and maybe a year or so later, they come back and they say, well, wow, we didn't realize that there was so much involved with sales tax. You know, I wish we actually started from from scratch, automating this whole process, because it's not something that we want to really focus on. So one thing we would suggest is, you know what, be compliant from day one, and also look into automated technology. That's really what we focus on as a company. That's what we've had a lot of success with, and a lot of conversations that we've had with different customers and different partners. It's, well, this is what we do, right? We help companies out there better automate sales tax compliance. We do it every single day, so we can do it a lot more efficiently. We can do it a lot better, faster, cheaper than companies out there that really don't focus on sales tax compliance. A few suggestions that we'd make sure that you have an understanding of your filing requirements, right? The sales tax, how often you have to do your sales tax returns, that you understand the product taxability rules, and also managing the whole sales records, whether it's for taxable sales or exempt sales, right? So those are different things to really know. And we're gonna talk about different ways to automate the process and how we can actually help with that. So I'm actually gonna bring Chris in. Chris, are you there?
Yep, absolutely.
Perfect. All right, Chris is going to talk about different ways to automate the process and give you a little glimpse of how we can help do that as well.
Yeah, thanks, Andrew. And hello again, everyone. My name is Chris Rossini. I'm a regional sales manager here at Avalara, based out of our Durham, North Carolina office. Thanks again, everyone, for joining in. So as Andrew mentioned, what I would like to do at this point is just kind of go through, kind of walk through the different slides on automating the process, and then change over and actually show you how the application would work in a couple of examples. So automating the process, it's obviously going to save some time. It will definitely increase your accuracy. It'll mitigate the risk, improve your efficiency, and then ultimately it'll increase the profitability. One thing that Avalara likes to hang its hat on is that sales tax, unfortunately, internally is handled, and it doesn't generate any revenue for the company. It is a completely, it just doesn't generate anything. So with automating that process through a solution, you can generate those resources that you're using currently internally to manage sales and use tax to something that actually makes a little bit more money for it. Andrew, if you could go to the next slide. So Avalara offers an end-to-end compliance solution. So there's 3 different solutions and 3 different modules that I'll go through throughout the demonstration, that I can illustrate how this works. It all starts at the very beginning with Avalara Avatax, which is the calculation engine. Starts with validating the address, looking at sourcing rules like Andrew mentioned before, assigning that correct jurisdiction by the rooftop, determining that product taxability, and then ultimately the reporting end of it. Next would come cert capture. There are a number of people that have exempt customers, and they have an exempt certificate that's on file for that customer. In the event of an audit, an auditor is going to want to look at what are the valid exempt certificates that the customer has on file to ensure that you're not collecting tax, or I'm sorry, that you should be collecting tax when you're not. So Avalara Cert Capture is a way for you to maintain all of those certificates through automation. So I'll show you using technology that we can request those certificates. Your end user can actually collect those certificates via a web portal. All of the certificates are housed in the cloud to where they can be accessed easily and stay organized. Those of you that are managing your exempt certificates and filing cabinets with paper everywhere, you can see a big advantage with using the Cert Capture feature. And then the last piece of the puzzle would be the filing and the remittance of the sales tax returns. Think of Avalara, that, go back to 20 years ago, 80% of the companies 20 years ago managed all of their payroll obligations internally. Fast forward to today, that same 80% of companies are outsourcing the payroll, and they're hiring companies like ADP or Paychex to cut those checks for their employees because it's more cost effective to outsource. When it comes time to file a tax return, Avalara can file those returns on behalf of the client with the click of a button. We do a one-time ACH remittance for the payable amount, and then Avalara will file and remit each of those individual returns on an independent basis for you. I'll show you that as we go through a demonstration. Next slide, Andrew. So this is a good idea of how the solution works. Avalara is a cloud-based solution that works through what we call connectors. And connectors, simply put, are pieces of software that are built to allow Avalara to speak to different types of systems. ERP systems like NetSuite, e-com platforms like Magento, homegrown systems, even Webbbility. So the piece of connector is the software that allows the two systems to talk. So I have an invoice on the top right that would represent any type of invoice or shopping cart that you would be using. When that customer is inputting an invoice or completing information on a shopping cart, that system is going to make an outbound web call to the Avalara platform, and Avalara is going to send that information through a series of algorithms and give back to that system a correct sales tax calculation based on a couple different factors. One is, who is the customer? Is the customer exempt or not? Second, where is the customer located, and where is the product coming from? Has to deal with sourcing. And finally, what is the product and how much does it cost? Andrew illustrated that for you earlier, to where if you bought a pair of boots in New York that's $120, it's taxed differently than a pair of boots that's sold at $90. So Avalara understands the information and sends it back into the invoice for a correct calculation. The content that's housed in Avalara is given to us by the states. There are some states that give that to us willingly, and there are some states that we have to go find it the old-fashioned way. It's the worst job on the planet. They have to go search Department of Revenue websites to determine exactly what the calculations need to be. It's a daunting process, but it's one that we have. And then as you can see by the arrow pointing back to the state, when everything's ready to be filed and remitted, we handle that for you as well. Next slide. So if you can transfer a presentation over to me, Andrew, I can go through a quick demonstration of how the product would work. Okay. So what you can see now on my screen is the Avatax dashboard. Now, I will say that if you're using certain ERP systems, NetSuite being one of those, the Avalara platform is embedded within the ERP system. So depending upon what type of system Avalara is connecting to would depend on how often you see this particular dashboard. But for the purpose of this demonstration, I'll illustrate how the Avatax system could work as a whole. The initial screen that you see is just a simple landing page that has high-level information. So here you can see any account alerts that may be specific to your particular Nexus states, a particular tax summary at a high-level view, and then of course there's a help center here. You can look at Avalara forums, you can check out what's going on. If you're really interested in the lovely world of sales tax, you can check out what's going on in the world of sales tax. So I'll kind of go through these tabs along the top so I can show you how it works. First, we'll look at an organization tab. One of the features with an organization tab is that multiple companies can be under one dashboard. You'll see here under Ava's Tiki Hut, I have a parent company, and then I have Hal's and Hal's She underneath that as children relationships. So the dashboard is able to handle multiple parent-child and multiple subsidiaries with independent sales tax profiles. And sales tax profiles are indicated over here to the right. Here you can select your Nexus jurisdictions, we can map your tax codes, we can dedicate specific tax rules, items, and then exemption certificates. So this is where you would do your setup. And if you are a company to where you have multiple subsidiaries, you can have independent logins for each one of those subsidiaries to where they can only see their specific tax profile. So you have a lot of flexibility on how that gets set up. Moving over, I'll give you an example of what a transaction would look like. If I go over and pull data information, and I'll go back to where I have some. Excuse the delay. I have a couple of different invoices that I want to show you the illustration on. What I want to show is I have the same exact item in all three invoices, but they're all taxed differently. The first would be a New York customer. So I'll click on the transaction, and I'll expand and go through. First, I want to show the sourcing, as Andrew mentioned. This is an address to where it's coming from Durham, and it's being sold to a customer in Brooklyn, New York. And what we're purchasing are clothing items. I have a blue shirt that was sold. The sourcing is based on destination, so New York, and it's a line amount of $110.99. You'll see that amount is taxable, and here's a breakout of what the tax rate would look like. It's 4% to the state, 4.5% to the city, and then there's a special tax jurisdiction for commuter transportation. What you'll also see is down here on the bottom under brown pants, I have an item that's $109.99, and that item is now non-taxable because Avalara understands that this particular item, which is apparel, is only taxed at $110 or more. So this $1 difference saves this particular customer tax. The advantage here is if you're using Avalara to maintain your compliance, you don't need to keep up with these rates and rules changes. When your system makes an outbound web call to Avalara, Avalara is going to understand how this particular item is taxed at this particular location at the time of invoice. Let's take a look at a different one. These are the same items, but for Massachusetts. So if I open this invoice, what you'll notice is that rule has now changed. So I have a blue shirt that's $109.99 that's still marked as non-taxable in Massachusetts. If I look now at clothing, I have the brown pants that are $119.99, and that's also marked as non-taxable. This same invoice is taxed differently in Massachusetts than it was in New York because of specific tax rules around clothing in the two different jurisdictions. I'll show one more example. I'll now show an Illinois customer. What you'll notice here is it's a little more straightforward. There are no specific tax rules when it comes to clothing. So I've got the same blue shirt and the same brown pants, same price points, both now are completely taxable. What you'll notice here is on this particular breakout, there's a fourth level of tax. I have the state, the county, there's the city here, as well as a special tax jurisdiction. So the transactions are 3 different invoices for exactly the same items that are taxed completely different ways depending upon what those items are and how much they cost. And these are on items as simple as a shirt and a pair of pants. When you look at other items like software as a service, for example, it gets way more complex. If you also look at items thinking of freight and shipping, it also gets complex. Regardless of the amount of complexity, you can almost set it and forget it when it comes to calculating the sales tax. So let's talk real quickly about those customers that are exempt. If you have customers that are exempt, then you need to have valid and legible certificates on file in the event of an audit. Because in the event of an audit, if your certificates are not valid, you are now on the hook for those certificates. So we have a product called CertCapture, which can help maintain that. This is a technology-based platform that allows you to digitally keep all of your forms, but also track all of those forms. From here, you can perform reports on certificates. They can be certificates that are expiring soon. We can run a report on every certificate that's expiring in the next 90 days, and we can set up campaigns to send emails out to those users to have them complete new certificates. If I were to run the report, I can get all of my information directly from a spreadsheet, which would look similar to this. I can capture all of my customers, do a search against those customers, within seconds, I can pull all of those customers that have exposure. I can perform a campaign and send an email out to every one of those users letting them know that I need them to complete a wizard and complete a new certificate for me. That can all happen very quickly. We can also set up automatic reports that run without you having to touch it. If you ever wanted to do a search on your certificates in the event that you got audited, you could come through and select your states. I'll just select one. I can run those search results and pull all of my Arizona certificates in very quick fashion. There's 135 certificates that I got pulled very quickly. I can see those certificates by simply clicking on the link, and it would open up that valid certificate so I can take a look at it here. I can print, I can email, I can do a number of things with the certificate. If CertCapture is on board, when the ERP system talks to Avatax in regards to is a customer exempt or not, if there's a valid certificate on file for that customer, Avalara is going to mark that customer as such, and you can be compliant in the event of an audit. Finally, when it comes time to file a return, you click back over to the AvaTax platform, click on the Tax Returns tab, and we can pull data and information. So I'll pull up date range where I have information for, and this will house all of my transactions for August of 2009. What you'll notice is every state that I've selected Nexus, if I do have sales in that state, I've collected the sales tax. I also can manage all of your filing calendars within a state. If you have a state like Alabama, you have a monthly return due there, an annual return to the city, and a semi-annual return to the county. You'll notice the ones that are not due are accrued, and the ones that are due show a remit to Avalara. By simply using the drop-down and clicking Approved, you'll set off a chain of events that puts Avalara on the hook for filing those returns. Avalara will have a one-time remittance out of your sales tax payable account. We will then file and remit to each individual jurisdiction on your behalf. Once the returns have been filed, we house them in the archive for a minimum of 7 years. If the states require it longer, we'll keep them there longer. But all of your returns are listed right here in PDF format. They can be saved to a hard drive, they can be housed here in the AvaTax platform, and they can be accessed at any moment. From a reporting standpoint, I can move over to another tab and I can pull a tax return report, which will give me any type of level of granularity that I'd like to see. I can generate a sales and sellers use tax summary for any date range that I'd like. I can generate this report and I can see a lot of different levels of granularity. It starts with the states, but as I click on each link, I start getting more and more granular. So you can see the state, Massachusetts. If I click jurisdiction once more, I'll get to see which invoices were involved in that particular type of information. You'll see those Webbbility invoices that I pulled before have now moved over and have been reported here. Okay? I know we're getting up against the time, so I'll stop the demonstration at that point, and we'll open it up for the Q&A.
All right, thanks very much. That was really enlightening. We'll get started on a couple of these questions. Some of them may have been covered, but since they were raised after the point, let's just clarify to make sure. So the first one comes from Peggy, and the question is, how do you handle taxation of gift cards?
Hey Peggy, good question. This is Chris. And it's one that I unfortunately don't have the answer to off the top of my head. Andrew, do you have any insight on gift cards?
Yeah, that's the first time I've had that question. Peggy, we can get back to you on that.
Great. Yeah, and along with that, we may not cover all the questions just since we are running up on time. Anything we don't have an answer for or don't get to, we will follow up with later on. So the next question comes from Terry. Say we store and ship our product from Alabama, but sell on Amazon. Where do we have Nexus? So this is sort of an FBA question. It also raises the additional question of fulfilled by merchant, if there needs to be any consideration of Amazon locations. We did have a conversation about that, but Andrew, if you can clarify specific to this question, they store and ship. So they are fulfilling themselves from Alabama, but sell on Amazon.
Gotcha. We would actually have to have a follow-up conversation about that. There's some more questions I have to actually give you an accurate answer there. So we can follow up directly as well.
Okay, great. So then the next question comes from Joseph. He says, do I have to charge a company who is in another state tax on an item if I'm drop shipping it to a customer in my state? So I think what Joseph is saying is that he is the fulfillment end of a drop shipping relationship, and the end customer who actually purchased is in the same location he is, but the retailer is in a different state. So is there an indication of where the responsibility is in a drop shipping relationship, and how should he handle that?
In that case, he would have to charge tax because he does have Nexus within that state. And there's a lot of different drop shipping scenarios where it kind of becomes, it depends. I think we could have a further conversation as well, but to address that question, yes, you would have to charge sales tax in that scenario.
Great. So is there a general rule for drop shipping relationships? If I'm the retailer, do I have responsibility for collecting sales tax based on where my drop shipper is storing and shipping from? Or as the drop shipper, the person who's fulfilling, do I have the responsibility of collecting tax based on customer location or retailer location?
So I'll say that again, it depends. There's a basic scenario. Say if you have Nexus within that state, obviously you would have to charge sales tax. Now, if you don't, but the drop shipper does, then it depends on the guidelines within that specific state, and it differs state by state. So it depends on what the state guidelines are for that state with regard to drop shipping. So again, I think that kind of needs a more in-depth conversation, and we'd be happy to follow up there.
Yeah, that makes sense, and it kind of highlights how complex this issue is, so glad to have you on. The next question is from Denise. She asked, because Amazon constantly transfers products between warehouses based on its own requirements, how would your system know where the FBA-sourced product is shipping from?
Chris, insight on that with FBA, does it just charge, would it just be a Nexus trigger if it was a sale within any one of the states where there's fulfillment centers?
Yes, it would be. So as it relates to FBA, you typically have Nexus everywhere that Amazon has a warehouse that they fulfill from. So where they ship it from is irrelevant, unless it's an origin-based sourcing rule. If it's an origin-based sourcing rule, which aren't too common, but they do occur, then Amazon would need to let you know from a compliance standpoint as to which warehouse that was shipped from. Typically, it's a destination-based sourcing, so where the product's coming from is typically irrelevant. It's where it's being consumed. And if the product's being consumed in a particular state or jurisdiction where Amazon has a fulfillment warehouse, then you would be required to collect sales tax.
Great. Thanks for that. So we have another question from Diane, who's actually a current Webbbility customer, and this is a good question for you guys. If they have sales tax from their own walk-in sales, so in their brick-and-mortar location, as well as the online sales that are processed through Webbbility, how does Avalara combine the two so it can be reported properly?
That's a great question. And what Chris mentioned was that we're very connector-based, right? So we have partnerships with Webbbility, different shopping carts as well, different e-commerce sites, different ERPs as well as point-of-sale systems. So the great thing about it is, more likely than not, we will have an integration with that point-of-sale system or with your ERP, et cetera, et cetera. And we're able to consolidate all the reporting within one application within the admin console that Chris showed there. So it makes it a whole heck of a lot easier because you're not having to manually pull different data sources and combine the reporting. Everything's automatically transferred to our admin console where you can see the breakdown of reporting from different sources.
Great. So yeah, so Diane, it sounds like if Webbbility is not supporting your point of sale, then Avalara most likely will. That's the majority of the questions that we have right now, and we are just a couple of minutes before our time. So any questions we didn't cover or anything that required further follow-up, we'll make sure that either Webbbility or Avalara are able to do that. So thanks very much for your time, and enjoy the rest of your day.